The Bitcoin chart is in a 7-month range. I wanted to start here on the daily time frame, zoomed out a little bit just to talk a little bit here about the idea that look, we've been now in a range for a long time, and we're currently in a price region that we already tested in February, early February, end of February. And this is not great if you like trends, but remember, we're in a bear market. I always try to emphasize not to make things too complicated. There are a lot of people out there who talk this, structure, up and down, and try to invent certain structures and patterns. And I mean, of course, so we talk about the structures here as well, but sometimes it can make sense to really just take a step back and look at it and say, well, this is actually quite simple. It is a larger range. However, it's a range that we could break out from very, very soon, because this is where Elliott Wave comes into place, right? So you will look at this and say, well, okay, not much happened. It moved up a bit, it moved down a bit, but there is an important distinction here. The Elliott Wave helps us to understand the nature of the structure. For example, the move up from the February low was a 3-wave move up, and then it was followed by a 5-wave decline. While it might seem like a range, and don't get me wrong, it is a range, it still tells us something about the direction the market wants to go into and continue to move into. Of course, at some point this might change, but we can only really look at what the market is doing right now. So you see how fast the declines were in this bear market and how stretched out the movements to the upside were so far. This is, by the way, in a bull market, which happened after the 2022 low, exactly different, right? It's completely different. There you get rallies up, fast, rapid rallies with a lot of momentum, and very choppy and overlapping movements to the downside that take a long time. Rally up, choppy move down, rally up, and then the whole situation changes in a bear market. It suddenly starts to decline very rapidly. Choppy move up, rapid decline, choppy move up, rapid decline, choppy move up, rapid decline. So my view is still that we could at least get one more low in this bear market, simply because we have a 3-wave move up, which took a long time, and a 5-wave decline, which didn't take that long. And now we're again moving higher. And I can tell you that this has again the potential to extend into a larger 3-wave move up before going lower. Very similar to what we saw here. 3 waves up, 5 down, 3 waves up, 5 down, 3 waves up, 5 down. And as long as we see that sequence, the pressure remains down and we remain in a bear market. This whole situation might change as soon as the market gives us 5 waves up, 3 waves down, basically bull market structures, and as soon as we break above resistance. But at the moment, we do not break above resistance, and our daily time frame chart shows that. So if we look at the daily chart, you see that we're not above resistance. In fact, the market is just testing the very first Fibonacci resistance that we normally talk about here on this channel. It's between $66,230 and $76,630. As per my last updates and also the newsletter that I sent out a few days ago, by the way, I recommend that you check out the newsletter as well. If you haven't subscribed, it's of course completely for free. And I do share a lot of additional stuff in there. But, I highlighted that there's a good chance that this bounce, which we call from an Elliott Wave point of view, a wave 2, it's a corrective rally in a downtrend, the second phase in a 5-wave decline, that this could still stretch out a little bit higher, potentially to 69 to 72K. So, and after this 3-wave move up, what we should see is the next 5-wave decline. So I will not rule out that this wave 2 already topped, but to me, it looks like we might want to go a little bit higher, a little bit deeper into the resistance area. So I would say now, let us take a look at the smaller time frame chart as well. By the way, some of you might not know it yet, but you can also follow us on X. It's the More Crypto Online channel. You get a lot of additional updates here every single day. Today, I, for example, posted several 1-2 setups here that you can find, a lot of altcoin updates and a lot more. Feel free to check it out. You can also get additional news here and much more. It's the More Crypto Online channel. Just make sure that you follow only the one with the golden check mark. Okay, let's take a look at the shorter time frame. This is interesting because clearly we are in a local downtrend from the high on the 21st of July. Look, the main question is, do we do we eventually go higher in this wave 2? Or are we breaking down more directly into the direction of 40K? And to me, the main zone that will help us distinguish these two potentials, and both should eventually point towards further downside, it's this zone. It's between 59,369 and 62,533. So as long as this zone is holding, the market can attempt to make another rally, another run higher, potentially towards the 72K level. There are a lot of different levels that meet there, not only the 61.8 retracement, but we can also find trend lines, the 21-week EMA, the 200-day simple moving average, and so on. So looking at this structure here, my view is at the moment I can call this an ABC structure to the downside, and the C wave is likely in the making. The very first micro resistance is between $63,487 and $64,024. This is initial resistance, lower resistance. Or I call it micro resistance, because it's very much possible that we're here in a direct impulse to the downside. If that's the case, however, then the third wave should at least get one more low and potentially reach the area around 61.5K before we get a wave 4 and a wave 5 to the downside. We are now maxing out initial micro resistance, so I will not rule out that something different is unfolding. But exactly that is why I'm working with micro resistance or lower resistance and upper resistance, because look, a break above lower resistance is a signal that at least a local low is in. But it doesn't mean that we're breaking out to the upside necessarily. That would also require a break above upper resistance. And until both of these are broken, the pressure is down. This is because the lower resistance needs to hold to keep the direct impulse down alive, but the bounce will be too high for an internal wave 4, as you can see here in the white count, if the price breaks above 64K. In that case, then, we might be dealing with this. Let me highlight that in blue. It would be the same count, but it would mean that we're forming a so-called 1-2-1-2 setup to the downside. A wave 2 can bounce a little bit higher than a wave 4, but I can tell you that above the upper resistance, above $65,070, it would mean that the bulls are taking the lead. Until then, it seems like the bears are leading, but these are the two resistances I'm watching. And to the downside, it's this area around 62,530, which could provide support next, and below that, 61,590. That should give you all the key levels to watch. But again, just like on the larger time frame, where not much happened over recent months, actually it was a quiet year so far. Also, the smaller time frame here shows you that, I mean, we are currently in a price region that we already tested early in July, so it's a range here as well. Not too much going on, but we'll, of course, as always, keep you updated. Hope it was helpful. If you're interested in additional updates, I recommend that you also check out our membership, where you can get access to our Discord server, to our academy, our learning portal. You can get access to the daily analysis and much more. There's also an Elliott Wave course. Feel free to check it out. I put the link into the comment section for you. Thanks so much. Bye-bye.